Hi everyone and welcome back to the channel. I hope you're all doing well. Today's video is a bit of a follow-up video from when I revealed my entire stock market portfolio last week, which I'll link at the top of this video, so feel free to check that one out if you like. It shows some of my biggest losers which are still in my portfolio, but some of the lessons I've learned from these mistakes has allowed me to claw back some returns in the process, and in today's video I'm going to share my 3 best investments which have returned the most amount of cash back to me, and you'll be able to see the valuable lessons I've learned firsthand. If you enjoy this video, please drop it a like and subscribe to the channel, I'd hugely appreciate it. Stock number 1, which has returned the most back to me, and this is Virgin Galactic. I've disclosed my trading information on the screen here, which you can see when I picked up 120 shares back in July 2020, where I put in £1,800 of my own money into the stock. And then 7 months later, after a huge run up, I decided to sell on the 12th of February 2021, locking in a huge profit of 152% or a cash value of £2,760. Let's take a few steps back first and let me tell you why I started a position in Virgin Galactic. My main reason was that under the surface back then, things were starting to bubble in the space sector, with 2021 beginning to be dubbed the year of the billionaire space race. Jeff Bezos and Elon Musk's space flights also due to take place during this year, so my thoughts were that on the build up to these events, the share price would go in some sort of rally. And why was I so confident about this? Well, I'd been stung in another stock like this before where I'd bought it, but that time I bought it at the top as opposed to selling. So that was a huge lesson for me and one I was able to take advantage of. When I started investing in 2018, the legalised cannabis market was the hot topic, where stocks would go up and down 10, 20, 30% on any given day. And I made the mistake of wanting to be in this due to FOMO, fear of missing out, and I bought some right at the very top, and I still have it in my portfolio right now, which is a huge loss of mine. So what did I learn from this, and how could I apply it to Virgin Galactic? Firstly, I identified some of the similarities in the sense of the hype that was building up around this, and there was a lot of speculation on where these companies could be in the next few years, even decades out, leading to a lot of excitement. Secondly, I identified from Canopy Growth that on the day that Canada legalised the market, which was the 17th of October 2018, this was pretty much at the top of the stock, and it has struggled ever since, apart from a few run-ups. But overall, this is a great example of buy the hype, sell the news. Virgin Galactic's test flight was due on the 13th of February 2021, and with this huge run up, although I sold it 4 days before the test flight, I said to myself I wouldn't get caught with the same mistake twice, and I chose to liquidate the entire position, locking in a huge profit. Even when you look at these charts side by side, they're so similar in regards to the run up to the top, the big sell off, retesting the highs before crashing towards the lows, and in this case I was able to use my previous downfall to my advantage, and it worked out quite well. On the same sort of subject, my second best return is with Kronos, another company similar to Canopy, and I did buy it whilst I was on the hype train, but a bit of good fortune occurred when Altria announced it was carrying out a $2.4 billion strategic investment within Kronos, resulting in the share price rocketing. I have to hold my hands up and be honest with you that this was just entire good luck which had happened whilst I was in the stock. I picked up 338 shares at a value of £2,890 of my own money, and I was able to almost double this within the 5 months, registering a profit of £2,710 or a 94% from the capital invested. And although I'm able to share a positive outcome in this instance, please note where the share price went from when I sold it. If I hadn't sold it at that time, this would have really affected my performance within the stock market, and I would be likely still holding this right now at a huge loss. So again, please take care when investing in these more speculative companies. And finally, we have my third best performer, and this is a UK sports betting company, William Hill. When I picked up my initial shares in November 2019, the share price had been in a continuous downturn, heavily related to the fact that UK regulators were introducing new regulations such as the £2 stake rule, where in retail stores and slot machines, which you would usually play the likes of blackjack and roulette, were enforcing a £2 max stake rule, where beforehand you could put hundreds of pounds into one spin. Of course, this affected the company's results and a hawkish view on the UK betting industry as a whole. I'll get into why I bought into this company in just a little second, but first, let's go through the data. I bought shares on 2 occasions, once in November 2019 and then on the 3rd of March 2020, just as COVID was decimating the markets. Looking at the chart, you can see how low it actually went, where it reached close to 30 pence, which is absolutely crazy when you think about it. At this point in my portfolio, I was down massively, but by creating my own good luck, and what I mean by that is that in order to take advantage of these situations, you or me, the investor, we need to be willing to risk our capital, and in this case, it went down a hell of a lot before it got better, but I held it in anticipation that my bull thesis was going to carry out, and it did due to a takeover from US Caesar's Palace. Back to why and when I bought William Hill, my bull thesis was created around this article taken from the 2019 annual report on the left hand side, but was also a common theme in their 2018 annual report, and this was their vision to participate within a growing US market. No, I didn't totally expect it to be part of a takeover, but with the combination of a growing US presence as well as redeveloping their UK business model on the back of the regulations, I'd felt that a lot of the headwinds were already priced in. And with William Hill looking forward to enhance their UK digital capabilities, I felt that a lot of the bad news was already priced in. And then on the 30th of September 2020, £2.9 billion takeover was agreed at a cash offer of £2.72 per share. So all in all, I was delighted with this return, especially considering how much I was down on it for months. I hope you enjoyed this video and got a little bit of value from it, of the possibilities which you can get from the stock market. But please, please, please take care when you're investing in any companies, even more so when you've got so many ones here, which although the returns can be great, it can be very volatile at times. But again, thanks again guys, and I'll catch you in the next video. Cheers!